Welcome back. Well, the Nifty has managed to put on a whole 100 once again. So the markets are trying to move away from the early morning slump that it had, and now it's practically at the highs of the session, so not bad. By the way, BPCL is taking flight once again. Stocks up about 3.5%. And technology continues to be the strongest spot. We've been maintaining that. So TCS, for instance, is still retaining those gains. Wipro is up about 3% as well. Let's get that conversation going then with the Bhavin Shah of Sameeksha Capital. Bhavin, thank you very much for joining in. You know, we're looking at all these technology stocks flying high, and I just want to tell our viewers that, of course, you made a huge career in analyzing, big tech trends and tech firms in India and in Asia. So let me actually just start there a bit. What is the view that you're taking on both large cap and mid cap tech over here at the end of the third quarter? I mean, stocks have moved a lot more than say management commentary or actual earnings numbers. What is your stance on tech? I just give us some color on how you would be positioned.
I think the part of the move might be related to what has happened to valuations in other sectors of Indian market, and so I think relatively IT continues to look attractive. I think those are companies generating huge cash flows and also paying them through buybacks and dividends, and also and I think when we look at things like cash flow yield and payout ratios, this group of companies continue to stand out. Especially when you had this big rally in other segments. Now, as far as the business fundamentals are concerned, I mean, I think it seems like with a little bit more positive view of the Western economies. There will be more optimism about the IT spends, and I think underlying trend of obviously the stronger activity levels for the Indian IT companies overall continues to be in place, and that I think is maybe driving the market. But we want to be a little cautious, especially not chasing super expensive stocks, because I think what happens is that those stocks are primed for a sharp correction whenever maybe the company is not able to meet any of those expectations. So I think we continue to be selective, very selective. But I think if you do that, there's still some pockets of opportunities.
Let me talk about one of your big bets, and that's Interglobe Aviation. Now, a lot of people shied away from holding aviation companies due to very high ATF and the fuel costs that they have to pay, the taxation involved. But you've been betting on Interglobe Aviation, and now with the sudden rise that we've seen, this consistent rise that we've seen in travel and tourism, Interglobe Aviation has taken flight. Now tell us from here on, the company's reported good financials, but how confident are you about Interglobe Aviation's performance, financials, and valuations from the current level?
So I think the industry structure is the most important thing we have to keep in mind. Industry structure is of Interglobe Aviation controlling more than 60% of the market, followed by the Air India group having another 25% odd. I think that sort of industry structure is unheard of, unprecedented anywhere in the world for a large market of the size like India. And so I think nobody has a template to analyze aviation in that context. All the templates you look at past data, have to be thrown out of the window, and this sector has to be looked at very differently, in my view. On top of that, here is an airline which has best-in-class cost structure and a clear focus on being a low-cost, efficient carrier, and I think and also very strategic about the way they acquire aircraft and the way they look at a lot of aspects of the business. And I think the delivery has been pretty consistent. I mean, I think company dealt with COVID in a very efficient way. I mean, and today the competitor, their direct competitor, Air India, obviously has a work cut out for them. I mean, obviously it's in the hands of Tata Group, so they are going to try to build that business in the right way from a long-term vision. And in that process, we don't expect Air India to come and basically start to compete on price. I think, and that I think is also a departure from what Interglobe Aviation faced in the past when, while they were the lowest cost carrier in India, they faced the price competition from the likes of the SpiceJet or Kingfisher or, Deccan or, whoever. Obviously, all those competitors got hurt more trying to compete on price with Indigo. But obviously, it also suppressed some of the profits that Interglobe Aviation could show in the past. And now with this structure, I think, the trajectory for them to report very strong profits, I think is much more clear. Obviously, airline industry is subject to many turbulences, ATF, the crude price, and, many other factors can affect, obviously economic crisis, all those things hit airlines pretty hard. So we have to be aware of that. But long-term trajectory, given the demand for aviation in India, given the focus of the government in building the airport infrastructure. By the way, India is far ahead of China in building the airport infrastructure at this stage of development of our economy. If you go back and look at how many airports China had at this level of GDP per capita, it was far fewer. So I think there is also very strong infrastructure support from the government to boost this industry. So all in all, I think it's a very good place to be. And I think while the stock has had some run, but I think there is still a lot of room left to deliver pretty decent mid-teens kind of returns from here onwards on a long-term basis.
Okay, all right, Bhavin, we'll leave it on that note for today. Thank you very much for joining in. Good chatting with you and getting some perspective there. Well, we'll take a break on that note, come back on the other side and get you more on the markets. The Nifty holding on to that gain of about 100 odd points, at least for the time being. Back in a moment.